Let's take a look at the very latest in the world of business. The local index is expected to pause slightly today after the all-share index raced to a fresh record. The rand paused in early trade after rallying to its best level since mid-November at around 15 Rand 30 to the dollar. For a look at what is driving the markets in early trade, we're joined now by Makwe Masilela, Chief Investment Officer and founder at Makwe Fund Managers. A very good morning to you. Thank you so much for your time. Give us an overview of how the markets opened in early trade. Does the JSE have more record highs in the horizon?
According to you, yes, it does to some extent, but yes, unfortunately, after closing up nicely 2.5% yesterday, we opened on the negative down almost 0.7% in pro, and we've been dragged mainly by our industrials, with the likes of the NASPAS and the Proxas giving back some of the gains that we realized yesterday, and also the fact that weaknesses in the Chinese economic data is helping sentiments quite a lot today, because we've seen that when it comes to their mainland banking, that fell more than expected in December. So unfortunately, we're on the downside this morning.
Economists at PNB Paribas forecast that the rand will hit 16 Rand 50 against the dollar by the end of the year. Talk us through the rand's performance last year and if perhaps the forecast is justified.
You know, after weakening almost 8.5% last year, the rand this year started on a very strong footing. As we have seen so far, it's been doing okay, strengthened almost 4%. And all because, remember, the rand has been at the mercy of what has been expected when it comes to interest rates in the U.S. And I think all these interest rates in the U.S., that they will raise interest rates 3 times this year, has already been baked into asset prices. And the rand itself, remember, is also a commodity currency. So when you see commodity prices going up, then it gets to benefit. But we need to be very careful, because as it is, it's not just a simple equation that when the U.S. Fed start increasing interest rates, then it means the dollar as well will increase, because the dollar itself is a counter-cyclical currency. It tends to decrease when we see the world economy start to recover. And if we expect the world economy to recover, then we'll see the demand for the commodities. Then it means commodity currencies will continue to do well. And also the impact of the interest rate differentials, as much as they will be increasing interest rates, will also be increasing interest rates back home here. So that gap continues to be there. So I don't think it's a straight line formula like that. Yes, weaknesses, there might be there here and there, because there might be some tensions or geopolitical tensions that we don't know about, or if the economy gets to go to recession. But as it stands, I think the rand will continue to do well this year. I don't expect 1650. I expect something far below that.
You've made mention of some of the aspects, but we also know that the U.S. inflation rate has hit fresh 1982 highs, while China's December inflation slowed. Let's talk a little bit about these developments and what they tell us about global inflation and what it means for emerging markets like South Africa.
All it says that at some point, central banks managed to get it wrong, because they thought that inflation is temporary. But as it stands, I mean, last week Friday, we had the European inflation going to almost record highs. And as you said, the Japanese one is up as well. And what you call the U.S. inflation is at most 40 years high. And then the Chinese that doing the opposite, as we've seen that the inflation compared to November and December, it keeps on going down. And that itself, it tells you that there's two super economic world powers are moving in different directions, because with the U.S. inflation going up and with this whole message being well telegraphed that the U.S. definitely will be increasing interest rates, on the other hand, China might do the opposite, because the inflation is going down, and then that gives them a room. And be careful that we also have some weather conditions which can also be inflationary, because if we've got this bad weather that we've been getting now and then, it affects people not going to work, funny rains, affects the productivity, factories being closing, ports being closing. That can also have a negative impact when it comes to the world global supply chains. So that will also be inflationary as well. So I think we have to be cautious going forward when it comes to inflation.
Absolutely. And before I let you go, Makwe, what are your 2 stock picks for the year 2022? Or do you have any early rising stars?
I think I'll go with SPAR, the grocery company. Remember, the company is being doing badly compared to its peers, because remember, 20% of their revenue is coming from liquor, and we know the story about liquor. But if you look at that, we don't expect it to have some restrictions. You look at their PE, stands at almost 14, which is better compared to their peers. Their dividend yield at 4.8%, the best dividend yield when it comes to their peers, and their return on equity of almost 26%. It should do well, and it's well positioned SPAR, when it comes to the location. And I'll go for the bank as well, Standard Bank. I mean, a decent PE of 11, a better dividend yield, and I think they've managed to get their act together. They've just turned the corner and are following closely on the footsteps of First Rand. So I think Standard Bank stands a better chance, and also with interest rates going up, their interest income will be decent.
Thank you very much. Some of those early rising stars. Makwe Masilela of Makwe Fund Managers, Chief Investment Officer and founder.